Hey, everybody. Welcome back to another episode of the Blockware Intelligence Podcast. This week, we have a very special guest and good friend of mine, Nik Bhatia. Nik's the author of Layered Money, as well as he also now has launched his first newsletter. So this is something that I will definitely get into. How's it going, man?
What's up, Will? Good to see you, dude.
Not too much. I guess we can start with what have you kind of been up to lately? What have you been working on? Where's kind of like your mind space been the last couple of weeks to months?
Yeah, so I published Layered Money in January. So, around the summertime, once I was done doing my first, wave of major promotion for the book, I wanted to get back into writing, and I was trying to figure out what to do. Should I write a second book? And, circling a lot of the on-chain analysis that you're doing. That's how we first started talking. And ended up with this Substack publication, the Bitcoin Layer, because Bitcoin is now. I didn't want to wait another year or two to engage with the readers. And so the goal with the publication is put out content every week or so, engage with the community. What do you guys want to read about? What do you want to theorize about? And it's a Bitcoin focused publication with the idea that Bitcoin will be the world reserve currency one day. It's a very high conviction publication in that nature. What we're doing is narrating it and analyzing it as it happens in real time. So that's what I've been up to. I just trying to come up with ideas, listening to readers, DMing and emailing readers back and forth. And, what do you guys want to hear about? And then I get to my notepad and, start jotting things down, go for drives, come up with ideas. And then, it's just, onto writing at night.
Yeah, totally. So I want to ask you, like, now that we both have our own newsletter and you wrote a whole book. So how is the process of writing kind of been helpful for you, or, what are kind of the pros and cons to it? I've definitely shared some of my thoughts before, but I'm sure people want to hear what you have to say. I know writing a book must have been a crazy intense process and really long process, very tedious. So kind of walk us through how that's kind of helped your framework of thinking in general.
So as you know, I come from the asset management industry. I was a bond trader. So that's the furthest thing away from being a writer. You're in the numbers, you're doing math, you're in Excel, you're in Bloomberg all day long. There's no writing component to it. But when I started becoming a rates strategist, not just a rates trader, someone who has to articulate why we're going long or short, I really started to get into writing. And then when I, fell in love with Bitcoin, I wanted to communicate that. Like, how do you translate this amazing thing into words, and how do you advocate for a long position, basically? So that's really at the core of my writing. It's the long position is Bitcoin, and the why is what motivates me and what drives me. So, becoming a writer from a math person, from a bond trader, has been a long process. It's kind of surreal to me that I'm a writer. I still don't really almost think of myself as that. But it is the path that I've chosen. And I do love it because you're formulating thoughts. It's my mission to teach, and I want to explain why we need Bitcoin. It's moved away from the long position. That was at the beginning. You go long, you want to explain why, but I believe Bitcoin is a force for good for the world, and why it should exist, why it should be around, and why it's exciting, why it's a game changer, why it makes obsolete a lot of the financial industry overnight, why Satoshi was a genius, and all these things. There's 7 billion people out there, and I think that the more that I write, the more people I can reach and teach about Bitcoin and why it's special.
When you were putting the book together, kind of walk me through what was your day-to-day process? Did you wake up every morning, kind of got in a routine where for me personally, when I work, I usually kind of get in these like what's it called, circadian rhythms. I probably said that wrong, but you're just like in this mental flow where it's like your brain knows, okay, at this time of the day you're doing this, and it kind of associate. Like, just walk us through, did you have that with writing? Was it just like spurious, you just, oh, I have this thought, now I'm going to go write it down? Were you researching all day? I mean, just I'll kind of give you the floor to just talk through that whole thing.
Yeah, so I wanted to write a book about Bitcoin for a couple years. And when the pandemic happened, the opportunity just presented itself that you have the opportunity to completely shut off the world right now, leave every job that you have, leave every obligation that you have, and finally write this book. So, that was kind of March when I made that decision. April, I said, okay, I got to start writing this book. And a wise person once told me, great writing starts with great reading. So the process started with reading at night, in bed, late night, reading financial monetary history. Where do I start the story? Trying to figure out, because I knew the end of the story is Bitcoin. Where is the beginning of the story? Is it 10,000 years ago? Is it 1,000 years ago? Is it 100 years ago? That process was like a lot of reading, European history, that kind of stuff. And I settled on basically the 13th century Florence to start the story. And then as far as the rhythm, it I did have like a morning session and an afternoon session for the first several months of writing the book. The nighttime was for reading and formulating the thoughts, and then the daytime was for just grinding through the story. It was like basically bullet points the first time around. First, call it 3-4 months of the process was that. Then I switched gears to truly writing the book and making it a story, after all the research and the grind was done. And that switched to nights basically. So I would try to get in a morning session, a really good morning session of writing and getting the words out there, but all the fruits came at night. And so it's like 9 p.m. to 2 a.m. about that window for call it September, October, November of 2020. That's when the book came together. And so that was the process. The research and then the making it. And when I'm writing the Bitcoin layer, I'm writing a lot of the times at night, because it's where I find the rhythm to find the story. The thinking I can do during the day, the bullets of writing down in the pad, all that kind of stuff. So, but for some reason that the house is quiet, there's just me and my laptop. I oftentimes just turn the Wi-Fi off. So, there's nothing else.
Yeah, totally. It's funny, like when I write my newsletter, man, I started at like 12 a.m. or sometimes, and it's just like I'm up till 2 or 3 a.m. writing it. But I completely agree with you. It's just like it's complete silence, and you're just like wired in on what you're doing. I mean, you kind of touched on this, but what do you think like the main differences are between writing the book and the newsletter? And do you have one that you think is better, or that you prefer to do, or are you just different?
Thinking about a second book really puts that into perspective. You need an idea that is so intense to write a book that you can't force it. And, thinking about writing a book about on-chain or valuing Bitcoin or what that means, I realized that I probably need 2 years to formulate this idea. So it's just a completely different ballgame to write a book. If you haven't written a book yet, I would just like, if, to someone like you, or analysts out there that are thinking about it, if you haven't written a book yet, the first one is easy from that perspective because you're putting everything you've ever felt into one project. But I already put out layered money. So coming up with a second book, I have to basically start from scratch to come up with something amazing and worthwhile to write a book about. So the Bitcoin layer is probably my exploration into what is the next book. And it's at least a 2 to 3 year commitment to this project itself to flesh it out. And so you guys, subscribers will see in real time what are the ideas that are really driving me and the reader, and how is the story evolving with Bitcoin. And also, you don't want to write a book in a bull market. That's the other thing. Like that's something that I feel, let the bull market pass, then we can write the book in the bear market as the narrative gets to consolidate along with the price.
Yeah, totally. The other thing I kind of wanted to pivot to was like, now we've talked about the book, or in the newsletter, but I kind of want to give the audience kind of a brief at least overview of your background in terms of being a bonds trader, and then also teaching a class on bonds. Just kind of like give this high level. We don't have to go into too much of the nitty gritty because I know you have on like some previous podcasts, but just kind of give the high level of your background in that sense.
Yeah, so I was in the asset management industry for several years. I was a U.S. Treasuries trader and a rate strategist. Basically means I'm on a large investment team that is managing institutional money for very large institutions. So we're talking about the top corporations and top public entities like state and federal national governments. And I'm trading, I'm a fiduciary on their behalf, those large clients, and trading with the street and managing their bond portfolios. So, and it's me and a huge team. And so at the beginning, I was just, more of a papers pusher. Then I was an executions trader where, execution trader where people are telling you what to do and you're just hitting the button. Then it's like, what do you think about rates? Where are they going? And you're actually starting to write at the same time and put out ideas and recommend long or short, flatter or steeper in the curve. And a rates trader, really, and a rate strategist, his or her job is to analyze the global macroeconomy. Where is the economy going? And where are US rates going? What is the Fed going to do in 3, 6, 12, and 24 months? And being able to predict that was part of my job. And it translates into Bitcoin too. So here I am watching the yield curve flattening aggressively. And I wrote that, for your audience last week. And it's telling you that the Fed is going to be raising rates sometime in the next 12 months. It's going to be a mistake, and the economy is going to slow down on the back of that. It might sound to the average person like I'm making some, grand projection 1 to 2 years out, but a rates trader, they're just looking at the yield curve and telling you what's happened in the past. When yield curves collapse like they do, it means policy error. It means the Fed is raising rates, they're tightening financial conditions into a weakening scenario, and they're going to basically cause a slowdown in the economy. My background is analyzing what the Fed is going to do because what the global economy is doing. And somewhere along the way, when I found Bitcoin, I identified it right away as another global macro asset. And pretty soon, I realized that it was definitely going to be the most important one for my lifetime. And so, you skate to where the puck is going. That's why I left the bond industry for Bitcoin, because I knew that Bitcoin is going to replace so many things over the next, couple decades. And so that's where I want to be. But the bond industry is still, a big part of how the world works still. And imagining how we transition from the current world into a Bitcoin world is a challenge, because it's not going to happen overnight. So that's part of why I want to write about, things that have to do with Bitcoin becoming the world reserve currency. And then teaching at USC, Marshall School of Business, has been an honor. They basically, gave me the opportunity to teach the class after I came in and did a few guest lectures. I talked about the yield curve. I talked about the structural demand for duration, which means, the students wanted to make me a shirt that said, old people need 30s. It's a way of saying that demographics formulate a lot of the bond market structure. Why are 30-year US Treasury yields so low? Well, there's a permanent bid for the market, right? And when people talk about rates going higher, I think this is why they hired me at SC. Everyone talks about rates are going to go higher because of inflation. It's been wrong for so long, right? Inflation and US rates aren't as connected as people think. And when I came in and was talking about how rates are going to stay low in the United States, most likely on a permanent basis because of demographic and other market structure reasons, and all the other reasons that have to do with the dollar denomination being weak and fragile itself. That's why rates are low, because you have to buy treasuries to avoid the dollar exposure to every other counterparty. So those topics are all still relevant. It's not just a Bitcoin world overnight and we can ignore, all these problems with the dollar. The dollar system is collapsing in slow motion. That needs to be narrated as well. And yeah, I'm at USC teaching bonds and teaching the rates market. We're going to dabble a little bit into cryptocurrencies because of central bank digital currencies come from Bitcoin inspiration. So I'm going to dabble in all that, but I'm, working, to try to get more exposure to Bitcoin as well at the university.
Awesome. I have kind of a curveball question for you. So when we kind of think about this process of like hyper Bitcoinization, what do you think about kind of like a Bitcoin derived interest rate and a way to kind of value things based off of that? This is something I've tried to wrap my head around and kind of where this would be derived from. Do you have any thoughts on that and like how that perhaps maybe would play out?
Yeah, so you guys talk about funding all the time, and for my world, it's funny you bring it up. I was thinking a lot about funding because you and Dylan are always, citing the funding market, right? I'm learning from you guys. I'm watching you guys watch the market and learning about Bitcoin's market structure. Funding dictates everything in the short term, right? Well, if you think about treasuries, treasury repo is my world too. I was trading repo and tapped into why treasuries move according to repo and how treasury repo funding affects the asset class itself, and how it also tells stories about the asset class, like when funding goes negative, when funding is high, when there's a funding squeeze, all these funding issues. In Bitcoin, you don't have it as much, but in treasuries, you have quarter end issues, month end to a smaller extent, quarter end, and then year end issues where the calendar actually affects funding because of balance sheet strikes. All of that stuff, affects Bitcoin in a very material way. So I'm thinking about funding and how we can get a funding rate from Bitcoin through all sorts of, how can we get an interest rate for Bitcoin through all sorts of funding markets? So like I have written about Lightning Network interest rates for a long time, but that's not gonna tell you anything holistically about the asset class and how it trades and the need for the commodity, right? Because funding is you're borrowing to get the commodity itself or exposure to the commodity itself. That's why you borrow. In Lightning Network routing, it's a different sort of activity that has less to do with the asset class as a commodity and more to do with the time value of that commodity out in the capital market. So I know it's a long answer, but yeah, I'm thinking about funding a lot and less so about Lightning Network, even though I think Lightning Network interest rates are very important to reference for like exchange, Bitcoin deposits and things like that. But I think exchange derived interest rates is where the action is at. We need a clearer metric, right? Instead of just watching perpetual funding or just watching one exchange, it's going on everywhere. That's the part of the challenge, right? You're talking about funding on this exchange versus that exchange, and it's decentralized, kind of how the repo market works as well, why the repo market broke in September of 2019, because if one or two shops can't roll the funding, their rate breaks and it trickles down into everything else. So there's a lot of parallels there, and Bitcoin funding levels is something that I definitely need to do a lot more research in. And I'm hoping that you guys keep putting out content on that and explain it to newbies like us, because we need to think about it together. What the signals are from funding, because you can pick up the quickest signals, right? And be like, oh, market's going to flush, and it flushes. It's very obvious because it gets, funding goes really, sky high, and, the borrow is too expensive. It can't sustain itself. Boom, and it's over. So, yeah, I want to keep learning from you and understand funding holistically.
Totally. When you think about, this is something you've said often, is that Bitcoin isn't just going after gold. Like, I think that's kind of like, a given, right? It's, what Bitcoin's really going after is the bond market. And so when you kind of think through that process, what are some of the kind of, like, I don't want to say milestones, but what are some, like, the cracks that you see forming in terms of that dam kind of breaking over, just like that whole process in theory, and how are things set up now for that to kind of take place?
Yeah, so let's separate the hedge funds from the what we call LDI, or which is basically, you're talking about asset liability management. You're talking about insurance companies that have to buy bonds, that have these mandates. You're talking about banks that need bonds for their risk-weighted assets. You have all these structural players in the bond market. I think that hedge funds that have done rates trades are already well into the Bitcoin market. And so that, I think that conversion has already happened, but the legacy bond buyer shifting into Bitcoin and out of fixed income as an asset class, I think we're not that close to seeing that. And because if you think about the insurance companies that have to own, and they actually don't even buy treasuries that often anymore. Insurance companies are in the swaps market going receive 30-year swaps, which is when you receive in the swap market, it's going long duration. You're buying exposure to bonds, basically. And when rates go down, you make money. They are actually a perpetual buyer of 30 and 50-year swaps. They're just receiving every day in the market permanently. They need to do that because their liabilities are fixed in nature, because their clients are older people that are retiring, that need cash flow, and off the back of that. So that's actually the generational transfer between insurance companies and retirees. That sort of bit is, I don't think it's coming into Bitcoin anytime soon. Then you have like this middle of the market where people are trying to get alpha, right? And that's where you're going to see the floodgates. That's probably where your question lies. It's like, what are going to be some of the telltale signs that we see that? And that's really going to be when you look at I would say if you look at multi-strategy mutual funds that have exposure to fixed income and equities, they'll have a Bitcoin sleeve. That is going to be the first indication that you're actually going to see the fixed income asset class get reallocated into Bitcoin. Because in that way, the equity investors are more capable and nimble than fixed income investors. So people that own stocks already own Bitcoin, let's say, for the most part. Hedge funds that are in equities, and let's say they're multi-strategy hedge funds, but they don't own any bonds. It's like equities and some commodities trades, total return trades, alpha trades. They're already long Bitcoin, right? So that it's not that embedded bond bid that's ending there. But when you start to see that the 60-40 guys go 58, 38, 4, and the 4 is Bitcoin, that's really the crack. And that's when you're going to see the floodgates open. And even that, I think, is not right around the corner. you still have this flood of capital that's, call it hot money, equity money, hedge fund money, VC money, and young money too. It's this is people actually earning. It's not even just like rotating out of fixed income. You know, millennials, you know, your generation, I think you're not even millennial, you're below that. It's like you guys are earning, buying Bitcoin spot, and never for a second are looking at, like, once you get above the FDIC insured amount, you're not looking at what 60-40 portfolio to go in. It's like, should I put it all in Bitcoin or only 75% in Bitcoin and like try to own some stocks? So that's what this generation is doing. And there's so much capital that we can go to probably $1 million Bitcoin before really cracking the fixed income cracking open that fixed income bid.
That's really interesting. How do you think that some of your previous colleagues, I'm sure you probably still keep in touch with a lot of these guys, how have they reacted? Have they been kind of like welcoming Bitcoin with open arms? Is it difficult for them to wrap their head around it? Because I feel like, to an extent, just from your background, if you hadn't, understood how the system works, you wouldn't be as apt to understanding how Bitcoin could potentially be the solution. So kind of walk us through like how people have been reacting to it.
So generally, I have great relationships on the street, and I love all those people. I think the guys in fixed income and the women in fixed income on the street, and my sales coverage is up in San Francisco, down here in LA. So the men and women in the bond industry are great people. I can just say that. And a lot of them have gone long, either before I wrote the book, as I was talking about it nonstop, or after I wrote the book. They bought the book, they send me a picture, they say congrats, they send me a screenshot of, their XYZ first purchase, or, just like, I went long, thanks for, and all that kind of stuff. So I think in general, everyone is receptive to it. I think if you teach them about it and you show them, what they're probably realizing now is that putting $5,000 into Bitcoin was not nearly enough, and they probably made an enormous mistake making an allocation that was less than 1% of their net worth. But the reason that they did that was because they felt comfortable with putting 0.4% of their net worth in Bitcoin. They were like, I can take a flyer on that. Now they're realizing, oh shit, I should have done 10%, and why didn't I make that? And now they're probably going to be doing more research on their own. So I don't actually have, if either they're subscribers, they read the book, or they're doing their own, like, so JP Morgan has a guy named Josh Younger. Brilliant. He's actually like a rocket scientist that they hired away, to come in and do rates derivatives and like the swaps market master, volatility master. He's been writing about Bitcoin market structure for over a year at JP Morgan, and they just promoted him from rates to like head of something, head of, so
Something important,
something really important, and a brilliant guy. And so like Josh doesn't need, someone like me. He doesn't need to like be texting me, right? And like, hey, what do you think of Bitcoin? He's gone so far beyond. So the people that are intellectually interested in where the world is going, the signs have been on the wall for a long time, and so they have a lot of resources. The whole grayscale trade, I think, really woke people up into, okay, there's just like an arb trade. It's kind of like a vanilla trade. The underlying is Bitcoin, but whatever. And it's forcing people to get there. So yeah, I mean, I stay in touch with all these people, but it really is more still on a personal level, because they know that Bitcoin it's here. It's not like, hey, Nick, you've been talking about Bitcoin. I can't. That was 4 years ago when they were texting me that stuff. Like, oh, dude, you've been talking about this. Like when it went to 20K, right? That's when it was texting. Now it's like Josh Younger's been writing about crypto market structure for a year. And so, And so I think that people underestimate how many people are long uh, out there, but everybody's under allocated.
Yeah.
Um,
Even
including you
Sailor
and
would probably say he would still.
yeah, including you, me, and Mike Saylor too. So we're all under allocated, and when you realize that, then the correct trading strategy is to add in bull markets. So if you're in a multi-decade bull market, you should be adding all the time. Just like in the bond market, like when it sells off, you should be adding to the bond market because rates are still trending down over a long period of time. So you identify trends, the trend is up. People understand that. They don't get, like at least people in my industry, they don't get shaken out by 60 to 30K like noobs do, or people that aren't in trading or anything like that. Just people that are new to this industry, where fear and panic takes over. Rates, people aren't like that at all. And so they'll wait for a cycle, they'll see the evidence, they'll look at the price and they'll understand, oh, 60K. Yeah, they were right about Bitcoin. It's going to be 600K in a few years. So I need to get some. And it's all in the price. That's why there are people in the market. You guys are looking closer. It's like, what kind of size? I'm sure we don't see a lot of it though, because it's on exchanges and, they're just going long.
Yeah, totally. So we've kind of talked about how the macro situation is favorable for Bitcoin. Can we just briefly just talk about what would be the opposing view to that? If someone was coming to you and saying, "No, Nick, you're wrong, and this is why." What is the main reasoning behind that? And then explain kind of the counter argument to that reasoning as to why that popular train of thought is actually incorrect.
Well, anything can outperform Bitcoin if it attracts capital. And part of the way to attract capital is like higher interest rates, higher returns. And so, if you start seeing the assets that are denominated in dollars have higher returns, it could hurt Bitcoin's value. The reason that Bitcoin goes up over a long-term time horizon is because the dollar and dollar assets have diminishing value, especially short. Like if you keep your money in cash, right? Most people, they just earn and then they spend, and that money goes to their checking account. The interest rate is at zero. And the real interest rate is negative because there's inflation. That type of churn affects people's psyche, and they have to get out of that. So that's why they seek to buy. That's why they seek to gamble. That's why they seek the stock market, and so I think average people understand that need to not have cash because it doesn't do you anything. It actually does you harm to hold it. And, as long as people are making that assumption or that judgment, you'll always have that relative value trade. So, higher interest rates in the United States on fixed deposits, higher returns on capital, all that kind of stuff comes with like a really sound and well-working financial system. So if all of a sudden the financial system were to repair itself, the Fed were to figure out some way to bring some transparent, even the slightest bit of transparency back to how credit markets are managed and how reserve ratios work around the world. The Eurodollar system is another huge issue. We have this dollar system outside of the Fed, outside of the United States, that's kind of working, all controlled by banks outside of the United States, running their own dollar ring. And how do you reel that system back in? And how do you offer it discipline? And how do you offer it higher interest rates? Where we can clearly see that when the Fed tries to, we only have one example of the Fed trying to raise rates. They did it from 2015 to about 2018, totally broke everything, and rates collapsed back down to zero, and they had to do another 4 trillion in QE. So if that's the one example that we have of them trying to fix the system by raising rates, then really good luck. But the answer to your question is a dollar system that's fixed with higher interest rates. But I'm telling you, it's not possible. It's mathematically unsustainable to have higher interest rates in the dollar system because of how broken and fractured it is. That's why I wrote Layered Money. I had to show you guys, the dollar system, the euro dollar system, it's all so broken. It cannot be held together. And so it just exists as a broken system. Bitcoin is the exit from that. That's why it appreciates value the long term.
Amen, man. Amen to that. Yeah, and then I kind of want to pick your brain about like recently in terms of macro, everyone's been talking about the whole Evergreen situation. What are your thoughts on that? Do you think the market is overreacting, underreacting? Everyone on Twitter, every time there's some, immediate news, just recency bias, people act like everything's always the end of the world. So just kind of like walk us through your thought process on that. And by the way, everybody, Nik put an awesome piece in the newsletter a couple weeks ago. So be sure to check that out too.
Yeah, I covered Evergrande for Will's audience. And the high yield index that we cited, which was at 13%, has only continued to go higher in yield. So more and more risk being priced into the market. But here's the way I think about it. Everything is good for Bitcoin and nothing else matters because we're in Bitcoin now. So in Bitcoin, we're looking at broken fiat systems, right? Whether or not Evergrande's default causes a deflationary crunch in China because defaults impair balance sheets and that causes losses, which causes people to get fired, which causes the economy to slow, or they get bailed out and you have more money sloshing around the system to uses that were actually it's the wrong place to put capital. We call that the misallocation of capital. That's what a bailout is. It's a misallocation of capital because you're rescuing something that's failing. So I don't mean to skip the question, but it doesn't matter if Evergrande gets bailed out or defaults for Bitcoiners, because either way, it shows you that the fiat denomination assets are risky, or the fiat denomination itself is risky because they won't ever control the supply on it. Both are bullish for Bitcoin. People realize that now. It's the same thing with the Fed. So it's just every time a company defaults, it shows you risk. And Bitcoin is the alternative to the risk. And it doesn't mean that the price can't go up or down in US dollars. One Bitcoin is one Bitcoin. There is no risk. There is no counterparty risk. Take it off the exchange, there's no risk to you. And that is a dichotomy that has never existed, ever. And it's why the price of Bitcoin is so potentially convex, because you have everybody realizing the same thing at once, that there's only one thing that you can own in the world that avoids all risk, and it's Bitcoin. It's why you see parabolic advances in the price.
Sure. And speaking of risk, what are some of the biggest kind of tail risks that Bitcoin potentially faces? Like for me, for example, I mean, I'm not like the most technical person. So, if there is some kind of flaw with the cryptography that for some reason over the 12 years that Bitcoin's existed, we didn't realize, like, that's one like blind spot for me that I acknowledge I have. Like, what do you think through in terms of different risks that Bitcoin faces moving forward?
Yeah, I always say the same answer, Will. Like I always say the blind spot in the cryptography, because I, can't really vouch for SHA-256 myself. I'm not a computer scientist. But I think now it's this idea of, where's the price discovery happening? I think that's probably the bigger risk. And so, and part of that is these bull markets followed by these flushes. The more violent the flushes are, I think it does, over the long term, it doesn't matter, right? But I think it does damage to, it just does damage to balance sheets and to psyches, and then, to the industry. And so, avoiding 80-90% flushes, is probably healthier for Bitcoin. Watching its volatility come down is probably healthier for Bitcoin, but it still needs the volatility to keep that, to keep its edge. So I wouldn't say that it's a risk or a blind spot, but it's just something that I'm watching for. and hoping that maybe, the next drawdown will be 60%, 70%, and not 85, 90%, going to 500K back down to 50K could be, it could just be difficult for the asset class in its more mature phase. So, I hope that the ups and downs are mild from a relative perspective, right? I'm not hoping for any kind of smooth price action. I'm not an idiot, so it's just spitballing here.
Yeah, totally. What do you think about the 4-year cycles moving forward? Just for the fun of it, do you think we continue to see these very smooth kind of logarithmic curves as we go higher, or do you think we kind of become this more free flowing thing, especially as the asset matures and you see more, macro, investors or sovereign wealth funds investing that, aren't looking to constantly, sell the intermediate top and buy back lower? Do you think that kind of changes how, I guess, the market structure is shaped?
Well, I think that the 60 to 30 market this year tells us something. Um, it tells us that the bear markets might be shorter and more frequent than 4 years, because it felt like something a little bit more than just a mid consolidation of the bull market. It felt like an end of a bull run. It felt like a little kind of bear phase, and then renewed. It just like felt a little bit longer, and so that's something that I'm thinking about. It's too early to say, but it might be that we're in for shorter cycles. But it's like kind of like a widowmaker question, because if you make that bet, then you're going to have to hold that bet into the next halving. And then we're talking about the most fundamental of the whole, most fundamental aspect of the whole algorithm itself, which is the halving and the supply schedule and how that feeds into everything. So to just dismiss the halvings and the 4-year cycle way too early to do that, or for people to say that the 4-year cycle is dead, I still think it's early to say that. But that's part of why your analysis is so popular. People want to know. It's not a question that only sophisticated Bitcoin investors are thinking about. Millions of people are thinking about, is this a 4-year cycle to repeat itself, or is it not? And how can we get signal from all the noise? And they're turning to on-chain.
Totally. I mean, it's just weird that a lot of the, I guess you could say, behaviors or patterns that we're seeing in terms of where we are theoretically if we were in a 4-year cycle, and just that, like, for example, a lot of the hodling behaviors, different measures. I mean, we're looking at like long-term holder supply, illiquid supply. We're looking at like destruction, showing the amount of old coins that are being spent. All those things are low at what you would usually see at like the bottom of a bear market. Even basic things like hodl waves. When you look at like 3 months and 3 months and out, you have an all-time high in terms of supply that hasn't moved in at least 3 months. So like all of these different behaviors that you usually kind of see at the bottom of a bear or like a strong reaccumulation phase, to me, like those behaviors aren't resemblant of anything that's previously like marked, where a lot of people think we are in terms of the 4-year cycle currently. So yeah, I guess we'll see how it unfolds moving forward. Last question for you. This is one I ask everybody coming on. It's a bit more of a fun question, kind of theorizing about the whole hyper Bitcoinization that all Bitcoiners like to talk about. What are some of the milestones that you think are kind of most important in terms of like mine, I always say, are like A, El Salvador, and then B, like the politicalization of Bitcoin. What are some of those things that maybe other people aren't thinking about that you say, okay, if this happens, then we're probably going to speed up this process a lot, and it's maybe something like people aren't thinking about?
Yeah, it's definitely international real estate and business transactions hitting the wire denominated in Bitcoin. Company A in Italy buys company B in France for, or that's probably a bad example because they're both using the euro. So Italy, buys a company in Africa for 3,000 Bitcoin. And Hilton buys a property in Indonesia for 25 Bitcoin. And that hitting the wire and that becoming normalized is the tipping point. That's where we're heading. I don't know how soon we'll get there and start seeing those headlines hit the Bloomberg wire, but they're coming. Those days are coming. And when they do, everyone will know that Bitcoin it's a world unit, and it can be thought of as that. And so that's the type of activity that I'm looking for. It's what I call it's what I call the monetization event. How does it become money out into the world? We already know it's money because we already use it hand to hand as money, so we know it's money. People that own Bitcoin, and transfer Bitcoin to and from exchanges know that it's money because they use transactions, right? But when big companies are buying other big companies and doing deals in Bitcoin, property deals in Bitcoin, real estate listings in Bitcoin internationally, because that's the better currency to do business in. That's the monetization event that's what I'm here for, dude.
That was awesome. That's probably the most unique answer that we've heard yet. Never have heard that before. So glad I asked. Nik, this has been an absolute blast, man. I want to just give you an opportunity just to kind of like plug your newsletter in and anything else that you think people should be aware of, or if you have any final thoughts to kind of get off your chest before we wrap up.
Great. I hope people will join me on Substack at thebitcoinlayer.substack.com. That's my newsletter that I'm sending out. And I have Layered Money available on Amazon. It's also on Audible. And I hope that you guys will, check out the book and let me know what you think. Reach out to me on Twitter at time value of BTC.
Absolutely. It's well worth subscribing, guys, to his newsletter. It's awesome. Hopefully we can get him to do another guest piece on ours pretty soon. And definitely check out Nik's book as well. I mean, Nik's book was one of the ones that really kind of solidified my Bitcoin thesis last year when I started getting into Bitcoin as well. I think that book and the Bitcoin Standard, and then and I would say those two are probably like the two, if I was going to like orange pill somebody and say, here's, a couple books to read. So anyway, Nik, thank you so much once again. Hopefully we can get you on again in, the coming months or whatever. And I hope you take care, man. And appreciate you coming on once again.
Thanks, Will. Appreciate it, dude.
Take it easy.